All right. Good morning, good afternoon here, everybody. How are we doing today? If I can just get a quick audio and video check here, make sure we're coming through loud and clear, that you can hear me and see me. Hey, Ron, how you doing? Marion? Perfect. Thank you, Marion. I appreciate that. Hey, Mike, Frederick. Hope everybody had a great weekend and off to a good holiday weekend. For the holiday yesterday, enjoyed the day off, and hope everybody's off to a great trading morning this morning. I'm going to get our recording going here, and we're going to get rolling here. So welcome everybody to the Nadex Application and Strategy webinar series. My name is John Skelton. I'm with apexinvesting.com, and we do these webinars here for Nadex to offer you some free education to help you understand who is Nadex and what is Nadex and how to use the Nadex products. And if you've been with us over the last recent weeks here, we kind of started into a series of, going back and talking a little bit about Nadex spreads. I know a lot of you are familiar that Nadex offers two different products, binaries and spreads. Most people, it seems that are new to Nadex, initially start off with binaries, and they understand what binaries are and how binaries work. And and they know that Nadex offers spreads, but they don't really quite understand those spread things or how they work or what to do with them. And Nadex spreads offer some great trading opportunities and some awesome setups there, tons of different options. And so we wanted to go back through and kind of cover that. And what I wanted to do here, I'm going to pull up the Nadex site here for you in just a second and show you where you can go back and do a little catch up. Let's get our disclosures knocked out here real quick so we can move forward. Trading futures, options, or any financial instrument involves risk. It may not be suitable for every investor. Any examples you see here on this webinar are not a recommendation to buy or sell, or a solicitation to buy or sell future options, bonds, or binaries, or Nadex spreads or securities of any kind. Any trades you see placed here or examples of how to place a trade are in no way a trade recommendation. It's just simply showing you how to operate the Nadex platform, how to enter and exit tickets and trades, and so on. And trading Nadex involves risk, may not be appropriate for all, and anything here in this webinar is for educational and informational purposes only. And once again, I'm with apexinvesting.com. Apex and Nadex, two complete different separate companies. Nadex is an exchange. Apex, we're an online education company, a group of traders helping traders. We've got over 20,000 members. We're an education-based company. We've got strategies and systems, focus a lot on risk management and probability. That's why we love to trade the Nadex products with the capped risk. And like I said, we're an education partner with Nadex. We do these webinars here for you to help you understand what Nadex is and different ways to trade the products. I've been with Apex now for about 3 years as head of operations. I've got a background in banking and as a stockbroker, and I'm a trader just like you. Trade Nadex binaries and spreads every day. We trade them in our room. And tonight, or this afternoon, what we're going to talk about, it's going to be a very, very brief webinar, probably one of the quickest, briefest webinars you've ever heard me do. As you know, I can go on and on here, but it's going to be very, very brief. And for those of you that are veteran traders, spread traders, this is going to be very basic for you. And we did talk about this subject on our last webinar, but I really wanted to hone in on it because this is really the biggest issue, the biggest misunderstanding, and the biggest misconception that people have, especially new traders, about Nadex spreads. And so for some of you it might be, I know this, I fully understand this, but I get these questions all the time, and I know that this is the biggest misconception with Nadex spreads, and I wanted to just take a little bit of time today with a very short webinar to cover it. We're going to talk about risk and reward with Nadex spreads. We're going to talk about risk versus the actual amount of money you're required to enter a spread trade. And we'll talk about how to compare some different spread options here. But let me pull up the Nadex platform here. If you go over to Nadex.com, you go right here to the Learning Center, okay? And you go right here to Webinar Archives. This webinar we're on today is being recorded, and it will be up later today. And this is where you will find it, Okay, and this is where you can go back and watch some previous webinars. And if you go to Webinar Archive, go right here to Filter by Presenter. If you find us right here, Apex Investing Institute, you'll see these past webinars that we've done here. And so for those of you that are new to spreads or you haven't been with us the last few weeks, you can go back and do a little catch up here, okay? And I really want to draw your attention to this webinar right here, Trading Nadex Spreads in Live Markets. Okay, what we covered in that webinar is how there's different options available to you with spreads, with different floors and ceilings, and as far as different pricing. Okay, and I know for a lot of people on the webinar, I had a lot of people saying, you know, oh, that was an eye-opening experience. Oh, light bulbs just went off. I never got this before. I never understood this part. Now everything makes a lot of sense, and it really helped bring a lot of things together for people as far as why spreads might not have been working out for them in the past, that it wasn't that spreads don't work or they didn't understand how the spread itself worked at settlement, but about choosing the wrong spread. So I want to definitely have you go back and check that out, and you can even go back a little further here, and if you scroll down and go to right here, Common Misconceptions with Nadex Spreads, or even page 2. So some of you newbies are like, I don't even understand what spreads are. Right here, you can watch this webinar, Basics of Nadex Spreads. This is basically where I kind of handhold you and walk you through it like you've never heard of a spread and walk you through exactly what they are. Okay, so I want to make sure you know where you can go and catch up on all these things, because today we're not going to really review the basics so much and cover the basics of spreads. So if you need to catch up on what those are, you can go and check that out. And you know, part of the reason I'm doing this webinar here today, like I said, about this subject is, like I said, it is the biggest misconception and the biggest fear, if you want to say, that holds people back from spreads. And so I want to make sure to cover that again, and this is all kind of a setup for some of the upcoming webinars we have coming up. For example, next week we're going to talk about excuse me, we're going to talk about comparing binaries and spreads, because a lot of you understand binaries. We're covering some spreads now, how they work, picking the right one, understanding real risk, and then when you have a good understanding of both, then we can talk about, okay, let's look at the market, let's look at some setups, and which one's better for us here. You know I talk to a lot of people and they're like, oh, I trade Nadex binaries. Oh, well, I trade Nadex spreads. Well, if you ask me, I always tell people I trade Nadex. Okay, I don't just limit myself to just binaries or to just spreads. You know, I trade both, and what I'm going to trade depends on what is my chart telling me, what is my strategy or system telling me, what do I think the market's going to do, and I look at what's going to be the best for me. I weigh my options there, and that's again the great thing about Nadex is you've got the options of both binaries or spreads, and with either one you've got tons of strikes to choose from, tons of floor and ceilings, and tons of different expirations. And so I want to really get your head wrapped around, you know, not just I'm a binary trader or I'm a spread trader, but I'm a Nadex trader. And I want to look at the market, look at my options, and figure out the best one for me. Okay? So that's where you can go to get some great info there. And like I said, make sure to join us on these upcoming webinars, because it's all kind of piecing together here and building up to, you know, next week's webinar of how we can look at the market and compare some binaries and spreads. And then in March, we're going to be talking about, you know, some premium collection with binaries, premium collection with spreads. Just really dig into showing you both options there. Okay, so that's where you can go back and get some information. And if you go back and watch some of those basics webinar there, it'll go through again the very basics with you of what is a spread and how it works. And we talk about how every spread has a floor and a ceiling. And for example, you know, a spread, there's different spreads. Some spreads are 100 pips wide, some are several hundred pips wide. The difference in a spread is the difference between the floor and the ceiling. Okay, and we know that spreads move in pips or ticks. Each pip is worth $1. In this particular example here, there's 100 pips in the spread, so therefore this spread is worth $100. Okay, so you can go back through and, you know, catch up on those basics and how those basics work there for you. Okay. What I want to do real quick here is I want to pull up the Nadex platform. All right. And I want to show you here. I may have to log back in. I want to talk a little bit about something. Okay. And I know, again, a lot of you are binary traders, and so let's talk about binaries just real quick for a second to establish something here. And if you go through my webinars, you've seen me talk about this so many times. I've talked to so many people that say, hey, you know, I trade binaries, and I get a setup on my chart, and let's say I want to trade the Wall Street 30, the Dow Jones, and I go and I pull this up, and I see the strike ladder, and I see over here on the offer side what I can buy for. I see over here what I can sell for. Well, my strategy tells me that the market is going up, so therefore I want to buy. And I know that a binary at expiration is worth 0 or 100. So if I look right here and I want to go in and buy this particular binary strike, and I want to buy this one, ooh, what's the first thing we all look at here, especially as a new binary trader? What is the very first thing? Where does our eye go straight to? This number right here and this number right here. Max loss and max profit, right? And we think, man, do I really want to risk losing max loss of $83.75 to only have the potential to make $16.25? That's, maybe that is or isn't a good risk-reward ratio to your strategy or system or how you're managing the trade. But as a new binary trader, what is always your biggest fear? What makes your heart beat or race? This number right here, right, of max loss, right? So some of you may say, okay, well, let's go down and look at something different, and let's look at, this $45 or $65, or I like these really cheap ones here, and I'm just going to take the cheapest one out there, right? Because, hey, I like seeing that. Max loss $14.75, and I could make $85.25. Well, we know this is an out-of-the-money binary, and we know how out-of-the-money binaries work, and the market conditions have to be set up just right with those, right? But what I want to look at here is these larger numbers. Can everybody agree that as a new binary trader, when you see that large number right there, you start to get hesitant, don't you? Because what are you doing here? Well, what are you buying? You're buying this binary contract. And what is a binary? Well, it's a statement. And the statement says that the Wall Street 30 will be greater than 20671 by 2 o'clock. So if I want to buy this binary, I'm risking $82.75. If I hold this binary till expiration and the market expires at 20670, what happens? Or what if what happens? Does it expire being worth 0 or worth 100? Right, expires being worth 0. And if you held it till expiration and it expired at 670, you lose this whole amount right here, right? And that's what, as a binary trader, gives you, a little bit of hesitation, a little bit of anxiety. Is this number right here? We want to feel good about this number right here. I don't know if I feel great about the fact of losing $82.75 over one tick, or some things 1/10 of a tick. But okay, if I can buy this one here, and all right, I can risk 32, but okay, $32 may not hurt me so bad. I can maybe handle that. And what we do is we use our emotion. I mean, yes, you got to have a good strategy and system. Yes, you got to have good risk management. Yes, good risk to reward. Absolutely. But a lot of times, our emotions and our fear determines our trading and determines which option we go with, right? Because we want to feel good about this number right here. Okay. Now, yes, you got to keep in mind that even if you did go and get one of these more expensive ones, if it's going against you, you can get out early. That's one of the beauties and benefits of trading with Nadex, is you can get out before expiration. Okay, so for those of you that are binary traders, you're used to that concept of seeing that large amount there and knowing that at expiration, it's either all or nothing based on one tick or 1/10 of a tick, all or nothing. So when you're a binary trader and you're first getting introduced to spreads and you want to start looking at spreads, this is the biggest thing that holds people back from spreads. And again, for those of you who have been around a while, this is nothing new to you. You get it. We've talked about it plenty of times, but no matter how many times I've talked about it, I still have people that haven't tried out spreads because they still cannot get over this emotion. Okay, so let's pull up the same thing here on the Wall Street 30. And let's take a look here at some different spreads. You've got 2-hour spreads. We've got some right now that are going from 11 a.m. to 1 p.m. We've got some that are going 12 p.m. to 2. And then you've got the ones that opened up this morning at 8 a.m. to go to 4:15, or your dailies, which would have opened up last night. So let's go up here, and I'm not necessarily recommending any of these spreads. Again, this is not a recommendation of a trade, but I just wanted to review a few things with you here to really help kind of nail this home for you. So let's take a look here at this spread right here. If we were to open up this spread, and this is a pretty good size spread. It goes from 2,400 to 2,800, right? And let's say that I want to, let's see here, 698. Actually, let's do this spread. Okay, let's say that I wanted to buy this spread right here. Whoa, wait a minute. What's your heartbeat doing right now? Whoa, wait a minute. I've got a max loss of $504. Whoa, whoa, whoa. All right, that's making you kind of sit back here for a minute and go, I don't know about that option, right? Okay, or let's say that you look at the 8 a.m. to 4:15s. All right, let's look at some of those real quick here. Let me pull something up over here. Wall Street 30. All right, let's take a look at this one right here, the 500 to 800. Okay, say I want to buy this one right here. Whoa, $203. Okay, yeah, I don't like these spread things. I don't like these at all. I want to go back to binaries and risk $30 or $40 on a binary, $50 on an at-the-money binary, right? For those of you that have been new spread traders, that is still what kind of makes you hesitant on some spreads. Now keep in mind, I'm showing you the big daily spreads here, okay? There's plenty of spreads even here on the dailies that you can get with less money that you have to put up, okay? Or you can go to the 2-hour spreads and you can take a look at, you know, let's say 696, this one right here, okay? These are, I believe, 100 pip spreads. Okay, that one you can get into for $77, okay, if you want to buy it. Or this one right here, your max risk is $28. All right, again, watch the previous webinar we've talked about these different spreads with different floors and ceilings and what this different risk amount means, okay, and how they move. All right, certain spreads can move quicker than others depending on where they are based on the floor or ceiling. So those larger numbers I was showing you a minute ago are for the much larger spreads, okay? So there are a bunch of different options to choose from here as far as short-term expirations or long-term expirations. Again, really boils back down to your strategy or system and what is your chart telling you? Are you expecting a big move in the market? Are you expecting a little move in the market? How long do you think that move is going to take? You want to make sure you're giving yourself enough time to be right. Okay, but let's go back here and let's go back to this spread right here. Okay, and this spread right here, if I was to get into this and buy this spread, what is my max loss? It's 203. Okay, well, again, if you understand the basics of Nadex spreads, you understand that there's a floor and a ceiling, or a bottom and a top. Well, where is the floor of this spread? Where is the bottom of this spread? It's at 20,500. Okay, and the top is at 20,800. So I can't lose money below the bottom of the spread, and I don't make money above the top of the spread. So where's the bottom of the spread? It's at 500. Where can I buy it at right now? At 701. So what's the difference between 500 and 701? Well, right there, 201, right? So with the way that spreads work, the very most I can possibly lose is down to the floor. I can't lose past that. So what I have to do to enter this spread trade is I have to put up enough money out of my account to cover from the bottom of the floor to where I'm buying in. And that's it. Okay, that's how it works. All right, some people say, I don't understand like where these numbers come from of, you know, this max loss number. Well, and it's that simple. Let's take a look here. So this spread is from 500 to 800, okay, on the Dow. So let's just draw it out here on a chart real quick, okay, and let's take a look here. So this is a pretty good size spread. Let's just draw this out. So the top of the spread is up here at 20,800, and the bottom is at 500, right? So that is the spread right there. That's the top and the bottom. If you heard me talk about this before, you know, I say they look like a box. I used to call them box spreads. You draw them on a chart, they look like a box, right? This is the bottom of the spread. It's the top of the spread. So if I think that the market's going up and I want to buy the spread, okay, and I'm wrong and the market goes down, the most it can go, most I can lose is down to the floor here. The market could go down hundreds and hundreds of more pips, but I don't lose anything past this point. So if I'm buying into the spread right here, the only amount of money I have to put up out of my account to enter this trade is just whatever it is from the bottom to where I'm buying in. Okay, and that's simply what we showed you here. All right, now it's at 702, it's 202. Okay, so what I want to talk about here, again, very elementary, but for you binary traders, when you go to enter a ticket, you see this number of max loss and it messes with your emotions. And this is what keeps a lot of people away from spreads. Now again, I'm showing you a larger example here. Like I said, I showed you plenty of shorter term spreads. You can put up a lot less money. But understand that when it comes to spreads, okay, you have to change your mentality. All right? You cannot think like a binary trader. Spreads are not all or nothing at expiration based on one tick or 1/10 of a tick. Give me just a second, the screen will pop up. Okay? Sorry about that. Locked up a little bit here. So that's the first thing you got to do is don't think like a binary trader. All right? At expiration, it's not all or nothing like a binary. With spreads, 1 pip, 1 tick is $1. So don't be confused by the number that's listed there in the max loss section, okay? Let's say that your max loss is 200 bucks, okay? Well, what does that mean? That means that the market has to move against you 200 ticks, okay? What is the reality of that? Could it happen? Sure, because there'd be a flash crash, sure, okay? But you can exit early, all right? You can, the number that's there under max loss, that's the amount of money that you have to put up out of your account to enter the trade. Okay? That max loss or max risk amount is not always your true risk you'll take on. It's a matter of max risk versus planned risk and managed risk. Okay? Just because you might be tying up a little more out of your account, okay, does not mean it's all or nothing expiration. All right? And if you are managing the trade. So let's just take a look at something here. Where can we, all right, so right now we can buy this spread for around the 20,700 range. Okay? So that's right here, 20,700. Okay? Just want to show you something here. So that's where we can buy into this spread. All right, so we've got to put up about 200 bucks out of our account to enter that trade, right? Okay, so we've got to do, so the spread, $200 out of our account. All right, now let's take a look at something else real quick here. Let's go back over to binaries. And let's look at some dailies here. 20,000. All right. Let's just see here. 20,700. Okay. We don't have any right there at 20,700. Closest one be between these two here. Okay, so right now the spread's gone down to about 690. So here's a 690 right here. Okay, so we can buy this binary right here, the 20,690, for $60. Okay, see that? 60 bucks. The spread is back at about, see here, it's still at 700. All right, so 690 we can get a binary for right here at 690. Okay, 690. And we got to put up 60 bucks for the binary, right? So the binary, we got to put up $60, and the price and the strike is at 20,690. Okay, so just from a initial emotional standpoint here, what are we looking at? We see a ticket, okay? We see a Nadex ticket right here for, let's do this. Let's tear this ticket off. We see this ticket right here that we're looking to enter a spread with, okay? And then we also go over here to the binaries, and we look at the binaries, and we see this one right here, okay? Oh, let me tear that off, sorry. Give me a second. And we see this one right here. Okay, so we're looking at our two options here. And emotionally, what are we seeing? What are we saying? Well, to do this trade right here, max loss 58 bucks. Okay. We see this trade right here, max loss 200 bucks. Okay, whoa. So just emotionally looking at this and just looking at the ticket and just looking at the max loss, where do you think most traders probably graduate to or gravitate to? Well, let me stick with the binaries because I don't like this number right here, right? Show of hands, how many people have done that or said that or felt that before? Right, exactly. We've all done that, especially brand new, because that messes with our head a little bit. Okay? So, let's take a look at it on the chart, though. Okay? Let's look at this in reality. So, what happens if we hold this to expiration on the binary? Well, I bought the binary for $6.90. Okay? And I put up 60 bucks. What happens if the market expires one tick below it at 689? One tick. You get zero, right, Mike? And how much did you lose? What was your max loss on that binary? 60 bucks, right? Because the market went one tick under your strike price. Okay? So, on this spread, though, everybody got that, right? On this spread that we bought at 20,700. If the market goes down to 689 and then it expires, how much did we lose on that at expiration? We bought the spread at 700. It expires at 689. It expires 11 pips, 11 ticks below where we bought it. I had to put up 200 bucks to get in the spread trade, and the market went down to 689. Went down 11 ticks. What do I lose at expiration? The whole 200 bucks I put up? No, $11. Right, because it's $1 a pip based on where I bought or sold the spread compared to where I get out or where it expires. Okay? So in reality, in that particular example right there, I had to put up $60 to do the binary trade. So therefore, you know, on the ticket, it said max loss 60 bucks. I felt good about that. I didn't feel real good about the ticket saying max loss 200 bucks. But in reality, if the market expired at the same exact place, well, should that $200 I put up to get into spread trade really be concerning me as much as I thought in the beginning? Because I actually lost the whole $60 here based on one tick. I only lost $11 here. I had to put up $200 out of my account to get in the trade, but then I got all that money back minus $11 in fees. Right? What would the market have to do for me to lose the same $60 that I lost on the binary? The market would have to go from 20,700 down to what? 20,640. The market would have to go all the way down there. It'd have to go down it'd have to fall, you're right, Omar, it'd have to fall 60 points. And if I bring this chart back into focus, that's a pretty good amount, isn't it? So with the spread, I had to put up 200 bucks to get in the trade. But to lose $60, I'm giving myself a huge amount of room there to lose $60, aren't I? On the binary, I'm giving myself one tick to lose 60 bucks. And who's to say that I have to lose 60 bucks on the binary or on the spread? If I buy this spread thinking the market's going up and I'm wrong and the market starts to go down and it goes down 20 or 30 ticks, 20 or 30 points, I might just close it out and get out. And what did I lose on the trade? 20 or 30 bucks. Okay? So again, I know I've covered this plenty of times, and for you guys that have been around for a while, you understand that. But again, this is the biggest thing that holds people back from trading spreads, is they still can't wrap their head around over having to put up that much money out of their account. Okay? But you have to, again, not think like a binary trader, because it's not all or nothing at expiration. It's $1 per pip. All right? Now, let's look at this in a little bit, more extreme example. Remember when I showed you this earlier? Let's see here. Okay, one other quick thing here. Let's say that I'm right. I bought. Market goes up. I bought the binary for 60 bucks. The market does go up. It expires above my strike price. What is my binary worth at expiration? How much did I make on my binary trade? I bought a binary, I risked 60 bucks. What's the absolute most I could make if the market shoots up hundreds of pips? Right, the most it could be worth is 100 bucks. So the most I can make is 40. But what if the market shot way up? What can I make on this spread? I bought it at 20,700. What if the market shoots way up? The top of the spread is 20,800. So I have a potential to make $100 on the spread, but I only have a potential to make 40 on the binary. You see that? So if the market moves quite a bit, I actually can make more money on this one spread, potentially, than I could make off the one binary. Also, depending on what the market does, I could lose more on the binary. One tick, I could lose 60 bucks on the binary if it goes one tick under this. If it goes one tick under this, I only lose 11 on the spread. Okay? So if the market does have a pretty good move, you can see the potential there. Okay, does that make sense to anyone? To everyone? Any questions on that? Does that put things a little bit into perspective there? I'm not trying to tell you spreads are better than binaries or binaries are better than spreads. It all depends on what the market's doing. We're going to talk about that next time. But I'm trying to drill home to you here that you can't hold yourself back from trading spreads and testing them out because of that max loss number. It's not all or nothing like a binary. Okay? So you can't let that hold you back. All right? Again, back to this extreme example. Okay? Or this bigger example, I should say. Let's see, spreads. Where were we here on the daily? I think it was this one. Whoa! Max loss 400 bucks. Max profit 300 bucks. I don't like this number. Okay, maybe you don't. Maybe you don't want to do that one. Maybe you don't have the account size for that one. But how is this any different than what I just showed you? So we have that example of a $200 spread. Well, what if you'd done this spread instead and you put up almost 500 bucks to get in the spread? Oh, I don't like that. I want to go do the $200 one. Well, why? Are you, again, your strategy or system tells you the market's going up, but it doesn't go up. It goes down 20, 30, 40 pip points. You're probably going to say, hey, I'm wrong, and get out, right? I mean, with a lot of your strategies or systems, you know where your profit goal is, you know where your stop loss is, right? Now, some of you have larger systems, larger stops, but you know, do any of you guys trade with more than a 20, 30, 40 pip stop, 40 point stop most of the time? Most strategies or systems don't, right? For day trading. So if I know that if I think the market's going up and I'm wrong and it goes down 30 points, I'm going to get out and lose how much? $30. So if I'm going to get out if it goes 30 against me, as an example, does it matter if I put up $50 to get in that trade, $100 to get in that trade, $200 to get in that trade, or $500 to get in that trade? Do I lose more? Or I still only lose the 30 if I get out if it goes 30? Does that make sense? Did everybody just follow what I said there? So if it goes against me and it goes down 30 pips and I'm going to get out, I lost 30 bucks, whether I put up 100 or whether I put up 200 or whether I put up 500. I don't lose any more, do I, by going with those bigger spreads or putting up more money out of my account? I don't lose any more if I'm managing the trade, right? But what is my potential, perhaps? Remember that spread that look at this. So I got to put up more money to get in the trade. I'm still going to get out at the same place if it goes against me. But since it's a bigger spread, I have a much longer way to the ceiling. Look, what's my max profit? 306. So technically I'm having to put up more out of my account, but I'm not getting any more risk because I'm going to manage it, but I got a further away ceiling, so I have a lot more potential. Does that make sense, guys? Does that kind of put it into context there of you can't enter a trade or not enter a trade based on this number right here. You have to really get a picture of what you're doing and what you're expecting of the market and look at your choices versus binaries versus spreads. Okay? Yeah, let's say we weren't expecting a huge move of the market, just a small move. Well, then we might have gone with the binary because, you know, say it only moves up 10 points. Well, then we made 40 bucks on the binary and only made 10 on the spread. That's the opposite side of it. But again, if your risk is managed and you're managing your exit price, the amount you put up to get in the spread doesn't determine more or less of a loss. But it does determine more potential profit because you get a higher ceiling. Okay? Laura is asking a question. In this example, if the spread ends at 2,800, which is up here at the top, do we get $100 plus the original investment of $200? Yes, Laura, absolutely. If we were to buy into this spread at 20,700, at the time we looked at it, to enter the spread at 20,700, what was the floor of the spread? The floor, or the bottom, was 20,500, right? So the amount of money, Laura, that we got to put up to enter this trade is whatever the max risk is, meaning whatever it is from the bottom or the floor of the spread, which was 500, up to where we bought in, which was 700. So we had to put up $200, okay? And then let's say, yes, the spread went up and it expired at 800. So the first thing we're going to do is get back the money we put up, okay, which is $200, plus we're going to get the profit. So basically what it is wherever we buy or sell the spread at compared to where it expires is, or where we get out, is what we get back. So, little quiz here, Laura. Let's say we got in at 20,700 and it expires at 20,740. How much would we get back total into our account? We put up 200 to get into it. We got into it at 20,700. We got out at 740. So yeah, exactly. We'd get 240 back. 200 of that would be the amount we put up that we're getting back. The 40 would be profit. Now, another reverse quiz, Laura. If we put up, and for everybody, if we put up $200 to buy this, and then it expires at 660. We were wrong. The market didn't go up. We bought in at 700, thinking it would go up. It didn't. It went down and expired at 660. How much do we get back? Right. Technically, it's a $40 loss, but how much money goes back into our account? We put up 200 to get into it. We got into it at 700. It expires at 660. Yeah, exactly. We get back 160. Okay? So does that make sense? Does that make it a little more clear? Okay? Oh, Mike, I knew what you meant. I knew you got it. Let's see here, Laura. In the same example, if we get out and lose, say, 30, and it says, do we get back to 200 also, or net 170? Okay, I think we just answered your question there. Right, Laura? Right? Because Laura's question was, okay, if I have to put up 200 to get into it, but I lose 30, do I get the 200 back? Well, then you get 170 back. Okay? Because you put up whatever you got to put up to get in the trade, and then from there it's all determined on where you get out. Is it above where you got in or below? Okay, did that clarify it for you there, Laura? Laura says, are the spread support and resistance levels predetermined, or can we choose our own? You mean the floor and the ceiling, Laura? Is that what you're talking about? The floor and the ceilings are predetermined, okay, by Nadex. And if you go back, I actually spent a decent amount of time in the last webinar talking about this, and I actually showed you live how they do it, meaning like when the new spreads come out like on every hour, I showed you exactly how they do it. I'll direct you to that webinar. They're predetermined by Nadex, but it'll show you exactly how they determine them, okay? For example, just a quick example. Let's pull up this chart. Where was the Dow at, right now it's 115, at 1 o'clock approximately, this isn't a time-based chart, so I'd have to pull it up. Approximately, where was the price of the Dow at about 1 o'clock here when the new spreads opened up? Close to 20,695, 20,700, right? You see that? Okay. Well, let's take a look here on the Nadex platform. Let's go and let's refresh this. And right here, let's look at indices spreads, Wall Street 30, the 1 o'clocks. Let's see, yep, 20,700. See that? The floors and ceilings are determined like a minute or two before the new ones pop out, right where the market is. Because if you have 100 pip spreads, then what they do, wherever the market is right then, they make a spread. So if the market's at 20,700, then they make a spread that goes up 100 from 700 to 800. Then they make a spread that goes down 100 from 700 to 600, and then one right in the middle, another one on the top, another one on the bottom. Okay, so I'll direct you here to a webinar I did a few weeks ago where I really draw that out and show you. But they're predetermined. That means you know. It's not just random, oh, Nadex makes them up or a market maker makes them up and determines them whether the market's going up or down. Nope, it's always preset of where the market is at that time. Boom, 100 up, 100 down, or if it's a 300 point spread, 300 up, 300 down, and so on. Okay, so all right, guys, I said I wouldn't go long, and I kind of went over there, but does that help open up your eyes a little bit to showing you how you should not be hesitant to spreads based on just that number and that max risk number? It's a difference of max loss compared to planned managed risk, okay? And you have to make sure you understand that and you realize that it's not an all or nothing like a binary. And if you're a binary trader and you're trading binaries in your live account and making money that way, and you're like, I just don't know about these spreads, well, you know what? Start trading spreads in your demo account. Every time you get a setup on your chart, your strategy, your system, and you're entering your live binary trades, throw a spread trade in your demo account. Start playing with them. Get used to them. Play with them. See what happens. Okay? Start trying them out that way. And make sure to join us on these next upcoming webinars. We're going to really dig into comparing binaries and spreads together. Yes, if you go over to, some of you are asking some questions. If you go over to nadex.com, all right, some of you are asking where to find some of these other webinars where I covered that stuff. I will show you here. Right here. Hop on over to nadex.com, okay, and if you're on the Nadex website, let's see here, and going right here to Learning Center, go to Webinar Archive, okay, and right here, filter by presenter, go to Apex Investing Institute, that's us, and you can go back and watch the webinars here. All right, today's recording of this webinar, this is where it will be posted, but it's this one right here I did on January 30th, Laura. Okay, if you watch that one here, it'll go through and show you a little more about how those floors and ceilings are determined, and then you can go back and watch all these other webinars here like you're asking about. Okay, Mike says, never thought of comparing binaries and spreads per the actual cost like you did. That was great. Awesome. I appreciate that. Let's see here. Chuck says, why we want to buy a spread that straddles indicative like you showed us versus buying one of the floor. Okay, Chuck, that's a great question. Chuck says, why would we want to buy a spread like that that kind of straddles the floor and ceiling? Why would we want to buy in the middle and have to put up so much compared to just buying at the floor or ceiling? Chuck, we ran over a little bit here. I'm going to direct you to this one right here. This whole webinar right here is focused just on that. I actually draw a box like that. I show you the different spreads, one in the middle, one at the top, one at the bottom, the pros and cons of buying or selling one over the other. Definitely watch that, because that is the second biggest mistake that spread traders make, is buying or selling the wrong spread. And if you watch that webinar, you'll be like, it'll be a huge aha moment for you. This webinar right here is the one I was saying that just light bulbs were going off left and right. People are like, oh, I got it. So definitely check that one out right there, Chuck. That will make everything kind of really come together there for you. Okay. Let's see here. Okay, guys, I think they follow the Nadex indicative lore. We also talked about that on there as well. So, all right, guys, we ran a little bit over here. I appreciate you staying on and appreciate some great questions there. And make sure to follow up on those past webinars and to join us here on next week in our ongoing webinars as we start to put together spreads and binaries and start to talk about how to choose which one with your trading. So spend the rest of the week here catching up on some of these past webinars. You can be up to speed with us next week and do some demo trading with spreads and try them out. Okay? All right, guys, thanks again for joining us, and thanks so much for your great questions and your time here. We will see you next week. Have a great one.